Hey guys, it's Mark and Brenda.
Hey, Brenda, this is Mark. It's Friday evening. Welcome to Bitcoin Say What?
Bitcoin say what?
Boom shack.
Boom.
Hey, we are here to educate, entertain, and talk about the evolution of Bitcoin and
Yep.
cryptocurrencies and blockchain.
And we decided tonight, instead of going live this morning, we decided to get some wine and some what?
Hold on.
Whiskey.
Hold on. There, I can see it. Dad fuel.
Fuel, dad fuel.
Yeah, we clean it. This is actually the alcohol in here is getting it all clean for tomorrow's coffee. So ready to go. Got some cigars in the back there.
Yeah.
For later. Sounds like a plan.
Yep. We put behind Mark on the green screen anything that he loves. So we've had big boats and other boats, fishing boats.
Why isn't my wife back there?
Please. That's why I didn't put it back there. Because if you would know, like 10 minutes ago, we were fighting. So
We weren't fighting. We were having a discussion that raised the level of our blood pressure, which happens once in a while. So
yeah, so we were just doing our what is this, 34 years of marriage?
34?
Bantering back and forth. Yeah, so it'll be 34 years.
Wow.
Yeah.
Time flies, man.
When you marry as long as we have, you tend to be very direct. At least we are.
Direct?
Very direct with each other, and we don't Mark and I have never sugar-coated anything.
Yeah, there ain't no
I'm surprised we've actually lasted.
No. It's been pretty direct.
We're both very stubborn people. And so I know this is not Bitcoin related. And so you guys are probably like, whatever, guys. And half of you are now whoever's watching this on the replay is now just flipping out. But we're a very direct couple. And our children, if we have fought a decent amount, but that's okay. we are very just honest with each other. So anywho, we decided because Bitcoin is not having a good day today. And as of this recording, Bitcoin dropped from what did it start with a couple days ago? Last weekend, it was like 62,000 and now it's down to like 49. Yeah, or maybe it's up to 50.
We're down 25, 30%, somewhere around there, I'm guessing, if my numbers are correct. Yeah, so
we decided instead of getting up this morning and just talking about Bitcoin news and blah, 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 we thought, on Friday nights, we might actually not go live on Friday mornings and go Friday night and have a little cocktail. And if you guys want to learn about Bitcoin and blockchain, if you're new to this, or if you're just an average couple like we are, you don't have to feel intimidated to understand blockchain or crypto, Bitcoin, all the above. And we're going to dissect a paper called the Bullish Case for Bitcoin. How I ran across this was that I am taking a free course, and you can too. Don't know if I have it in the show notes, but I will put in the show notes tonight when we're done. Saylor, SAYLOR.org. And he has many free courses on this platform, but only one related to crypto, and it's Bitcoin 101, I believe it is. And so this was in the very first, what do you want to call it? Section 1 or whatever it's called. And this was one of the papers that you have to read in order to take the quiz for the first chapter.
Right.
And this is called the Bullish Case for Bitcoin. So I thought, well, if I have to take the test, we might as well dissect it with our friends online and any future people who find us, and just know that you don't have to be a brainiac.
How many times do you ever remember back in school that you were taking a test and you were having alcohol while you're taking the test? Never.
I never did. Did you? You're drinking at school?
That's my point. This is the beauty of all this.
I was a good Catholic girl. I didn't do anything bad like that. I didn't do it. Wow.
I barely studied.
Right. Well, I studied a ton because my parents made me. So we paid a lot for the tuition, so I had to do really good. But anywho, so here we go. We decided that, what we want. We haven't even gone through this. We've gone through these first 10 pages and are somewhat prepped for this, but we are learning together with you. So this is not something that we're teaching a course right now. We are just going through this, and we're going to kind of unpack it as best as we can and maybe bring up some questions. And maybe if you want to pull this up, let me put this up on. So this is what we're talking about. right now, The Bullish Case for Bitcoin by Vijay Boyapati, and that is his Twitter handle. And if you don't have a Twitter account, highly suggest you do. Anybody in if you want to start learning about crypto, you should definitely have Twitter because everybody in crypto is on Twitter.
I got Twitter.
He doesn't have Twitter.
I'm not a social guy. So
He doesn't actually. He doesn't have Twitter. I started a channel called Bitcoin Say. Hang on. I started a channel called
Bitcoin Say What?
And that's our channel. And I put it on his cell phone, and he follows it. So he does follow Twitter, but he didn't start his own Twitter account.
Oh, I didn't say I did. I said get your account. And I'm not saying I did. I just said I'm on it and I'm following. I am not a social media guy. Okay,
Right. So
for me, this was a big move. So I'm a little slow to that stuff. But to be honest with you, I get it. And there's some. This has been a great arena. I'll tell you what.
So you just need to get on Twitter, and when you get on Twitter, so listen.
Whatever.
So here's the deal. Let's get to our bullish case for Bitcoin.
Says.
So if you see at the bottom here, this is Vijay Boyapati's Twitter handle. Go follow him. He's brilliant. And at the top of his Twitter feed, he has the article the paper that he wrote pinned at the top. But if you want to follow tonight, and I actually have this in the show notes, but this is where you can actually find it. He's got a Medium account, and this is actually where it's posted as well. So either go on his Twitter handle, and it's right now, as of today's filming, it's pinned at the top, and then it has a link to here. So this is what we're going to be covering tonight. So I'm going to go back here just so you guys know what we're talking about and where to find the gentleman who wrote this, to give him total credit because he's supposed to be brilliant. Okay, so let me share a screen, and we're going to kind of go through a little bit this. I'm going to read a little bit, and then we're going to come back, and then Mark and I can talk about this. So let me share a screen, and please tell me, Mark, if you don't see something on here as I'm talking about it, so that we can fix it for the people. Because the other day I was doing TradingView and I was doing trading charts, and he didn't tell me that we couldn't see it. And then I talked for 10 minutes.
And then she yelled at me.
I'm like, what do you mean you didn't show it? And then I feel like an idiot. And I actually shared quite a bit of information. Now I'm like, what do you mean?
And okay, some of us in this world are really good at technology. And some of us in this
He wasn't even doing the technology. I was doing it, and he just couldn't tell me that it wasn't working. So, okay, so let's move on.
Stop with. I feel bullied tonight. Oh, bullied. Get it? Bullish. All right.
Bullish case for Bitcoin. All right. So let's talk about right here. I want to talk about there. This is the part where I'm going to read. Okay. It may seem foolish to invest in a digital asset that isn't backed by any commodity or government, and whose price rise has prompted some to compare it to the tulip mania or the dot-com bubble. Neither is true. The bullish case for Bitcoin is compelling but far from obvious. There is significant risk to investing in Bitcoin, but as I will argue, there is an immense opportunity. Okay, so that's obvious. We don't have to go over that. Now I want to kind of go over this here. I'm going to read just sections of this. So this is the genesis that they're talking about of this whole concept. Never in the history of the world has there been possible to transfer value between distant peoples without relying on a trusted intermediary such as a bank or a government. But in 2008, Satoshi Nakamoto, which is either a person or a group of people whose identity is still unknown, published a 9-page solution. And they give a link here. So when you go to the link that I told you to go to, you can click on this and actually read the white paper that Satoshi Nakamoto created. He published a 9-page solution to a long-standing problem of computer science known as the Byzantine generals problem. And I'm going to go to that in a minute. Nakamoto's solution and the system he built from it, Bitcoin, allowed for the first time ever value to be quickly transferred at a great distance in a completely trustless way. That's really important, the word trustless. The ramifications of the creation of Bitcoin are so profound for both economics and computer science that Nakamoto should rightly be the first person to qualify for both a Nobel Prize in economics and the Turing Award. So let me come back. Okay, so let me go over to this other screen, and then we can kind of talk about this here. So do you know what a Turing Award is, Mark?
No, I've never heard
So
it.
I didn't know either, and I'm sure some of you were like, "Oh my gosh, you guys really are stupid," but who cares? And we all got to learn at our own level.
Hey, don't call me names.
So they were saying that he's so smart, or this entity was so smart, that they should win not only a Nobel Prize in economics, but also the Turing Award. And the Turing Award is an annual prize given by the Association for Computer Machinery for contributions of lasting and major technical importance to the computer field. Just so you guys know what that is. Okay, so we're kind of, I think, at least how I like to learn is that as I come across things that I don't understand, I search them up so that I don't want to keep moving on into a paragraph or to a chapter without understanding. So I'm going to talk about the Byzantine generals problem. Do you want me to share it first, Mark, and then you can talk about it?
Oh, I'm going to talk about it.
Yeah, I'll read a little bit of it because it was saying that here that Satoshi Nakamoto published this 9-page white paper to solve the long-standing problem of computer science known as a Byzantine generals problem. What are you looking at?
I'm looking at the article.
Oh, see, this is our marriage. What are you doing? Are you not paying attention?
Here, how about I put it right here in front of it? Okay.
Okay, I got it. Okay, so I'm going to go to the screen now. Maybe you can follow along. So look at the screen because this is the Byzantine generals problem, and Mark knows a decent amount about this. So I'm going to read a little bit of it, and then we're going to talk about it. So this is the problem that Nakamoto solved, and this is important. And the only reason why we're teaching this is not that you guys want to like do some huge like read some big article on this, but I think if you want to invest in Bitcoin and understand it, and even in blockchain and cryptos, this is all part of this. This was the initiation of it. So to understand it is quite interesting. The Byzantine generals problem. And by the way, this Ivan on Tech Academy, amazing. And this gentleman over here, he's young. He's about 25 or 30. Ivan, he's brilliant. Got to follow him too on Twitter. I think it's just Ivan on Tech. He's amazing.
And he's a character.
He's funny, but he's very genuine and he's brilliant. So, okay, the Byzantine generals problem is one of the most well-known and classical problems faced by decentralized networks. Solving this problem was one of the key developments in the creation of Bitcoin and by extensions, all other cryptos. And in this article, we will see why the Byzantine generals problem is and why Bitcoin manages to solve this perplexing problem. So what is Byzantine's consensus? So consensus is a big thing in blockchain, okay? Byzantine generals problem was first theorized by the mathematician Leslie Lamport. The generals are a metaphor for nodes in a decentralized network. The core idea behind this thought experiment is this: how do you ensure that a peer-to-peer distributed network with no central authority can make correct decisions, even if some of the nodes are in turn rogue? Can we make a distributed system that is trustless and doesn't automatically assume that the participants are going to act ethically and work in the interests of the group? So let me come back and talk about this real quick. Do you know what nodes are, Mark, or do you want me to explain it? I mean, I know you know what nodes are, but
I understand nodes in concept, but I'm definitely still like, yeah, because I can't wrap my head around some of this stuff. I get it in kind of the 10,000 foot view where I look down. Okay, I get it, but I don't get it. So,
okay, so
you explain to me what
I've taken a couple courses, so it doesn't mean I'm brilliant on this, but in just real kind of down to earth terms, a node is just look of it as a computer, and there's multiple computers across the world. Let's just say if you just look at it that way. And they all are going to be verifying transactions on the blockchain. So if you do a transaction with Bitcoin, whether you buy it, you sell it, or because you want to buy it with it as investment, or then you want to now go send it to your mom. Like I bought my mom some Bitcoin for her birthday because she wanted it. That's all recorded in the blockchain. The nodes have to verify what?
So is it like a gatekeeper?
No, I wouldn't call it gatekeeper. That sounds... No, I don't know if a gatekeeper. It just verifies that I've got enough money to buy my mom. So I bought my mom $100 in Bitcoin for her birthday. Okay. So it would verify that I had enough money to buy it. And then it let me buy it. And then it recorded that. And then it recorded that I sent it to her. And now it's recorded that it came from my wallet to my mom's wallet. And that's all recorded in the blockchain. And then when my mom decides, like if Bitcoin goes parabolic, she's already like, I'm selling it and I'm going on vacation. And so then it record that she cashed out and then it went to her bank account. And so it keeps track of everything. It's a giant ledger, but the nodes are the ones that are verifying all of this. And so you have to have a consensus that enough of them agree that this all is happening to make sure that the blockchain is legitimate, is honest, and they all agree. So you don't have, so if you have, let's just say, I don't know, 10,000 nodes across the globe or 1 million nodes, verifying just Bitcoin's blockchain, that they agree what the blockchain is, because people are making transactions every minute, every second. Things are happening.
Right.
Okay. And so those all have to go into the blocks. The blocks are, well, we'll get into that later. So,
okay. So
the nodes verify stuff. And so that's what they're talking about in this business.
They're just, for better or worse, maybe my explanation's terrible here, but correct me if I'm wrong. So let's just say it's just something that just kind of like, as you're walking along, like high five, you're like, yeah, you're good. Keep going.
Yeah. You got the money. We'll let you buy it.
Okay.
And then, yeah, this wallet is where it's at, and your wallet's going to this lady's wallet.
A node is like a physical computer or some sort of machinery that it comes through to be verified.
Yep, and then it passes it on to the next node, and they all communicate with each other to make sure everything is legitimate and it's all recorded. And then as blocks are forming and they're attaching to each other, and it's. I get
that.
That's it. So we're going to stop and talk about just some of this stuff so you kind of understand it. Okay, so I'm going to go back to this. Where was that? There we go. Okay. So what is a Byzantine attack? So this is what we're talking about. So the thing is that how do we ensure? So the problem is that this peer-to-peer distributed network with no central authority, okay? Remember, there's no central authority in crypto, okay? That's something to really like swallow. Hang on, can you see me? Swallow. And make sure that you understand that the nodes don't go rogue or something goes bad. And so we have to make sure, how do we avoid an attack? So this is what this Byzantine attack they're talking about. In this scenario, we have a castle in the middle, which is extremely well stocked and fortified. The lieutenants have surrounded the castle. The general, symbolized by the crown, see it there, plans to launch an attack. However, since the army is so scattered, the generals don't have central control. The only way that the castle could be defeated is if the Byzantine army launches a planned and synchronized attack. If there's any miscommunication, the offense will fail. Speaking of communication, the only way that the generals can synchronize a strike is by sending messages via messengers. Now, this leads to several failed scenarios. Imagine that the messengers are traitors and they convey the information that is contrary to the army's strategy. Presume that the one messenger is out of 4 is a traitor, and he passes along that the message of retreat to some lieutenants when the actual strategy is to attack. What if the messenger gets captured by the enemy and their message is tampered with? Ponder whether some of the Byzantine lieutenants are traitors and plan to betray the army. So with this context to blockchain, this is where I'm at on here. Let me highlight this. With this context that we're kind of talking about, this little scenario, each lieutenant is a node in the network, and these nodes need to reach a consensus to determine the current state of the protocol. For anything to happen, a supermajority, 2/3 of the network in a distributed system will need to come to a consensus, an agreement, okay? What this also means is that if a supermajority of the network is malicious, the system is vulnerable to failures. Okay, so I'm not going to read this whole thing. If you want to read this, I'll put the link. I believe I have this link in the notes, the YouTube show notes. Go here and you can read the rest of it. We're not going to here to read like everything to you guys, but we just want to talk about it. And then I'll read this last part, and then Mark and I will talk about it. So how does blockchain solve this Byzantine general's problem? And then Mark understands this a good amount. Do you want to read this part and then talk about it?
Hold on.
No, right here. How does blockchain? Can't you read it on the screen?
Oh, no, not on my screen. I can't.
Okay. How does blockchain solve the Byzantine general's problem? Now, let's look beyond the generals and war metaphors and understand the problem with respect to blockchain and crypto. One of the fundamental issues with decentralized, and remember, it's not like we're going to a centralized bank, that a decentralized payment system must solve is the issue of double spending. So here we go. We got a buyer. Okay, let's pretend that's Mark there. And he's got Bitcoin. And he wants to send it to seller A and B. He can't, right? He could if he's splitting up his money, but if he's trying to send $20 to each one of them and all he has in his wallet is $20, that's double spending. When a user spends the same instance of crypto more than once, that's known as double spending problem. To get a clear picture, of this, imagine spending the same $10 bill to conduct 2 different transactions at the same time. Okay, so do you know anything more about that? Because Mark, you were talking about double spending before we started the show today.
No, I know that was that's one of the big keys that why the internet wasn't working, why the internet is kind of stuck where it's at, because this was the big problem, that you had a double spend problem. You couldn't
What do you mean the internet was stuck where it's at?
The way I understand it from the aspect of how I have followed this is that was the one problem with the internet, was trying to figure out how to not have this issue. Now you want to do it in a decentralized fashion, so it makes it peer to peer. So that makes it a truly a real issue, because there's not an authority to oversee the transaction. Do you see what I'm saying? So to create a decentralized network, and you don't want an authority there,
it has to be done right, otherwise
it has to be done absolutely correct, or this will be a
cluster mess.
Yes, an absolute nightmare.
Right, because then who do you go to say, wait a second?
Yeah. Hey, I need to go to the internet police and have a talk.
It almost seems like, okay, not almost seems like, but we all know in the beginning days of Amazon, and when you didn't, something was wrong, you're like, now how do I return this? And it was kind of a royal pain, It's getting better now. So not trying to compare this to the two. And again, we're talking about the bullish case for Bitcoin. So we're not trying to bash Bitcoin and like, oh, this is scary. But this is what they solved. So let's go back and talk about how they solved this problem, because it does sound like a nightmare, if it's not solved. So let's talk about how they kind of solve this. And once you know that this is solved, then it gives you more confidence in investing in this, and confidence in the whole crypto sphere. So what is the solution to the Byzantine general's problem, and how does it address double spending? In simple terms, Nakamoto's consensus: the nodes need to have skin in the game, okay, to incentivize them to participate honestly in the system, right?
Yep.
So Nakamoto's consensus used in Bitcoin is called proof of work, and you'll see that all the time, POW, aka mining. In this system, the participants or miners spend a vast amount of computing resources, electricity, to solve cryptographical hard puzzles. This spending of resources is also, and resources are electricity, and then also look at this picture here. Those are mining. This is like a mining farm, if I'm correct of what I'm calling this. Those are all little tons and tons of computer graphics cards, and they're all trying to solve problems. That's a ton of money there. Millions and millions of money there. So they're spending a lot of resources, money to buy this, money to rent that facility, and electricity to run that and to keep that cool, because it gets really hot. And this spending of resources is also known as proof of work, or work. This skin in the game is that the miners have this skin in this game here. Okay, so this is how do you mine crypto? This is how the mining process works. The distributive networks agree to a metric called difficulty. Okay, I'm not going to read all this. You guys might not be interested in all this, but there's this way they have to solve this problem. And once they solve this mathematical problem, the computer does, then you get rewarded a block, and then you get paid for that. The miner does.
Let me throw at you the way I'm understanding this. So if you have somebody that's in the system here and they're not doing something correctly, they don't get rewarded. Does that sound about right?
What do you mean by don't doing something correctly?
Oh, well, this isn't the same thing as nodes, correct?
Well, they're talking about mining, and they all talking about nodes. It's kind of a little bit
reward. So the bottom line is, you said on in that part of the article, it said being honest.
Yeah, so we're going to get to that, because
how can you be I guess my question is, I don't know if you know.
They can probably go in and change something, possibly. I believe when you run a node, you have a computer, and it's got some. You have to use like a software on there's a special software or JavaScript that you have on your computer that's running the nodes. So you could probably go in and change something on there.
Okay. So well, then that would mean, then if you're not being honest, then you obviously wouldn't get rewarded for some.
Well, let's see what they say here.
Okay. Okay.
Okay, hang on. I went back and I'm not going to share it. Now tell me if you can't see this, okay, huh?
Okay. If my eyes are closed, I can't. That's a joke.
Okay. Proof of work with respect to the Byzantine army. Now let's bring back to the Byzantine generals problem and see how proof of work mitigates the problem. And this is about what Mark's talking about. How does it prevent them from planning an attack? Right? Because if they plan an attack,
Right.
then the system goes down.
Yeah, we're being dishonest.
Right. So here we go. So they're going back to the story that we talked about earlier. So I'm going to highlight all this. Okay. Let's just highlight all this. The general and his army decide on a difficult metric. Let's say that the metric states that the final hash value must be less than 0.0001000. The general creates a message and hashes it until the value is lesser than the difficulty metric. So you have to realize, guys, when the computer tries to find this mathematical problem, it's like this long number thing that it has to solve. Okay. That's what they're talking about, these weird numbers. The general then passes along the nonce. Okay, the nonce is the actual solution, okay? Trust me, I took in these classes. It's not that hard. It sounds weird, and you might be like, whatever, I don't care.
You're like, who the hell, where did the word nonce come from? Is it actually?
I think it's nonce.
Nonce?
Nonce.
Okay.
The general then passes along the nonce, that's the actual answer, the message, and the final hash value to the messenger and tells him to relay this quickly to the lieutenants. If the messenger tries to tamper with the message, that nonce, the final hash will change drastically. This is one of the properties of cryptographic hash functions called snowball effect. I kind of know what they're talking about here. The idea is that if a slight change in this input will cause a drastic change in the output. The only other option that the traders have is to find another nonce, another answer that will result in the final hash that is lesser than the difficulty metric. Since we already know this is a resource-intensive process, the traders won't be able to find this new hash. When the lieutenants finally receive the message, they can easily test the validity of it by hashing the nonce and the message and checking it against the final hash provided. Okay, so this might sound really weird. Okay, but all I want to say to you guys is that I took this class from Ivan on Tech. I wish I had an affiliate link, but I don't. But I'm telling you, take Bitcoin 101. He talks about this. And when he talks about it, what happens is that the computer creates, so when you buy Bitcoin, okay, hopefully I have this right. When you buy Bitcoin, you have a transaction number. Okay, it has like a hash number, has like almost like your receipt. It goes in this thing called a mempool. And as I explained to my son, it's like floating in this pool, waiting to get put into a block. Okay, and within an hour, hour and 20 minutes, it will get put into a block, and a whole bunch of them get put into a block, not just one, a whole bunch of them. It has, I think, 1 megabyte worth of information it can fit into a block, and it's floating around in there. Okay. Now, when a block gets formed, when it can all shove into a block, it's when one of the computers solves this nonce, and then it forms. Okay.
Okay.
And then it attaches to the previous block, and it goes, okay, and now it's attached.
Is that the noise it makes?
It does actually, and that's why
amazing. I would love to hear that in real time.
And then, well, as this is all going on, another one is there's more stuff floating around, and then another one attaches at the end and does up and on it too. Okay. Now, if they want to mess with that, part of the information from the previous block is attached. So let's say we have 3 blocks here, and here's the previous one. Okay, and then there's the guy that came in here. Part of this information, no, let me think if I got this right. I think part of this information goes here or vice versa, and they kind of share a little bit of the information.
Okay.
And then the back guy here attaches too, and they share some information. So if one of them gets messed with, let's say someone goes, oh, I want to delete that transaction because I want to double spend or something like that. I'm giving just Brenda's scenario. That means that my transaction in this middle block, let's just say you think someone's corrupt, okay? Like, we don't have corrupt politicians, but let's say a corrupt person in the world, wants to go in and say, delete that out of there. I don't want anybody to know that I just bought that. And it's one transaction out of a whole bunch in that middle block. If you go in there and take that out, let's just say you could, then that nonce, that hash, not the nonce, it might be that, I think it's the nonce changes. It's not the same.
Okay.
So then the blocks are like, what the heck? and then the guy behind him falls off. And now let's say you've already attached 4 of them or 10 of them, they all fall off. So you can't mess with it because anything that's inside of it is all part of that block, which is part of that nonce, which is part how it catches.
If it's corrupted in any way, then it just
one little bit. You could change one little tiny thing inside of it, and the whole thing goes and it falls off, and then the guys behind them all fall off.
Then it wouldn't go through then, right? In essence, if we're talking about a transaction, right?
Yeah, but we're just saying, like, after it's been put together and it's all been blocked in, you can't go in and change anything.
That's my point. My point is that the system is designed as
to be honest and transparent and
I'll go
all the above.
Let me go back to what Michael Saylor said. He was talking about thermodynamically pure or whatever. So in essence, you really almost can't even screw with it, because if you do it, it's almost like trying to get into a building and the door's locked. You're like, well, you can't.
Kind of. And I believe if these miners wanted to go in and mess with the transaction, so let's say they got paid a lot of money by somebody, said, "Could you get that thing out?" I don't. This might not even be able to happen. So someone's going to probably chat in our YouTube channel like 3 years from now, but like, this lady's an idiot. Okay, so I could be. I'm really new. I'm about 9 months into this.
I think this is. Here's the thing. Okay. Complex ideas can be made more simple to understand. I think from my point of view, I am not a tech person. I am not, it's kind of funny because I think back to a good buddy of mine who took coding classes back in 1983 in high school, and he's like, yeah, and all these guys were the same guys that they are today. They have a certain type of brain, okay, because they loved. I mean, he was jacked to go to coding class. And I don't even know. And I looked at it, I'm like, I don't get it. I'm not interested. There's a cute girl there. I'm going over there. So my mind doesn't operate that way. But I do understand that in a system, what you want is in a system, you want a pure system. The more pure the system is.
It has to be pure. It has to be. We all want a pure system and everywhere. Our school system, our churches, our community. But this is a decentralized payment system that there is no authority that's running the show. So the authority is the computers and these nodes and the miners. And so what they're saying.
Okay. So then let me throw something at you. So you maybe I'll use school as an analogy. It's like there's no principal, there's no teachers, and we're all learning from one another at school. But we all got to be on our best behavior. And if like Johnny goes over there and he walks out and he's going to go smoke cigarettes, you're like, hey, you got to get your tail back in here. Or if he
kind of what this is saying is that the miners are getting paid to create the blocks, and the nodes are getting paid. If you run a node, you're getting paid to validate the transaction. And so if they go in and mess with it, then the blocks get affected. And then I believe if a transaction ever were to get kicked out, then I could be wrong about this statement, then they're not going to get rewarded, and they'll probably anything that they got paid will be taken away from them. Let me finish. I thought it's so expensive to do this, it's not worth it for them.
Correct.
To jack with it afterwards.
So think about it in a political view, and I don't mean politics, but I mean, okay, so we understand that people can be corrupted by money or whatever. Okay, so in this system, it's almost the reverse. If you're corrupted, in the way the world works now, it seems like the more corrupted you are, like, hey.
So I think the only way that
hold on, let me finish. Yeah. So in this way, as soon as you found out you're corrupted, you're kicked to the curb, right? Essentially, this is what this is.
No, you just don't get paid. You're not kicked to the curb. You're not going to get paid, or your money's going to get taken away. But the thing is that the only way that Bitcoin, Litecoin, all the other ones, if they're, I believe they're all run the same way, is the more nodes. I believe, in my opinion, the more nodes that are being run, the more stabilized the community is, the less of a chance.
Consensus.
If you're getting paid to be a validator, then you want to make money. You're in it to make money because it costs money. Like Mark and I are considering buying a node on a different altcoin, well, you just don't. You have to upfront a decent amount of money to even run a node. So it's an investment. So why would I want to be corrupt and be like, okay, I'll take one transaction out for you, even if you paid me whatever amount of money? It's just not worth it. And so,
well, there again, it's the old. Everybody's got their hands on the table. Nobody's double dealing. Nobody's dealing from under the table. That's my point. Is it's a real. The system is set up to be. We kick anybody that comes into this, and they're not being honest.
It's all computers. It's all computers doing it.
I'm using a person. I'm using an individual.
I'm just trying to clarify for whoever's watching.
You are absolutely correct.
There's not a there's not a centralized entity saying we're going to kick you to the curb like you're saying.
Computers, people. I mean, computers are built by people, correct?
Yeah, but I'm just saying that these are programs we're running. So to keep everybody has the same program. So to keep it, the more nodes that are running, it'll be kept honest. And if you might have a couple rogue people changing the whatever on their computer, the software, the JavaScript or whatever, if you have more nodes of people who are being honest, it'll be honest. And so that's how it is. It's not people deciding.
No, I understand that, but in essence, I'm just trying to correlate. I'm not talking about an exact specific system.
I don't want to confuse anybody new thinking that it's a centralized system with people kicking people to the curb.
Well, the system itself it may be decentralized because there's nobody really in charge of it per se, except the group. It's like the group is in charge of it in some respects. Because if you're not within the consensus, aren't you you're getting kicked to the curb?
Yeah, I don't know how they kick them to the curb, but
well,
yeah.
I don't care. But I'm just trying to see. I look at this and say, okay, if you truly want to understand this, because am I going to understand what a hash rate is exactly? No,
you don't need to. But we're just.
No, I don't. But what I'm trying to say is to people that are viewing this, if obviously if you're an MIT grad, you're not listening to this, okay? But if you're a plumber, or if you're a small contractor, or if you're a small business owner that
you're a realtor, you're a hairdresser,
whatever,
whatever.
This is not your world. So explaining it to them in a way that so let's take realtors. Let's say let's just say they're all realtors, and all of a sudden somebody comes in to do double dealing, and everybody's been honest up to this point, and this new realtor comes in and says, "Oh no, we're gonna do it this way." Wink, wink. And they're like, no, you got to go. Okay. So that's my point, is the system by consensus is kind of blocking or kicking out the bad operator. And whether it's a messed with hash or whatever. Am I correct in some fashion?
Yeah.
Isn't that really what we're talking about?
Mm-hmm.
All right. Boom. We're getting it done, man.
We're on page 1.
Holy cow. We're 40 minutes into this bad boy.
I had 10 pages to get through.
10.
We'll be here to midnight.
All right, everybody. It's midnight.
I'm at the bottom of my bottle.
Yeah. Let me tell you about
it. Let's get back over to here, and then we'll finish this, and then we're going to go back to because we kind of sidestepped over to the Byzantine thing. There's one last thing I think we wanted to talk about on here. Okay. So here's the summary. Bitcoin achieves Byzantine fault tolerance via its proof of work algorithm and cleverly mitigates the traditional pitfalls of decentralized systems by economically incentivizing miners by ensuring that they have some skin in the game. That means money. Bitcoin has assured that its protocol is as fail-safe as possible. By solving this quandary, both Satoshi Nakamoto and Bitcoin have introduced us to the game-changing phenomenon known as decentralized economy. Several other consensus algorithms have since come out, like proof of stake, delegated proof of stake, etc., which are not as wasteful as proof of work. All right. So that was kind of a sidestep. And then I want to go back to this bullish case for Bitcoin because that's where I want to see where we've went off here. Okay, so that's kind of where we were at, and okay. For an investor, so let's say you're watching this and you're like, well, I'm learning this. I think it's important to understand this because it's such a unique store of value or possibly payment system that you need to understand what it's all about because it's not just about, you know.
I would go back to at the beginning in the very first paragraph that you read, it said, and this is the last line of the one paragraph, there are significant risks to investing in Bitcoin. But as I will argue, there is an immense opportunity. So as a person who runs a business, such as we do, you have to, when you're making an assessment of, oh, do we do this with our business? Do we bring this product in or this product line in or this service in, or do we not? We have to weigh some risk and some cost involved in that. So I think that's what we're doing here tonight is you got to understand it a little bit. You don't have to know all the X's and O's.
Yeah, you don't need to know how the shirt is made, but you do need to,
Yes, absolutely.
Right. You don't need to know how the shirt is made because sometimes people just want to buy the shirt and that's it. But I think some of this you might want to understand it. So
well, I think as an investor, you're okay. So as an investor, you're assuming some risk. So the question is, how much do you educate yourself on investing? Do you just say, okay, well, let's take just basic investing 101. Okay, I'm going to go buy, I'm going to dollar cost average in the S&P 500. It's probably not that risky, but you may not necessarily need to do a lot of homework on it, and you walk away and you'll get a marginally decent return with really very little risk to it because they're the biggest companies in the United States, la, 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 la. Okay, that's one thing. But this is a much different animal because
this is so new.
Well, it's new and it's technology where people, we're at a point, where we're at in our, our journey in life that we're kind of on the other side of technology to some effect. We're kind of middle to the, to the early aspect of this where, a Gen Z person is like, oh yeah, I wrap my head around this because they've grown up with it. They understand it and they don't even, I use a great example. It's when we first had a computer and something went wrong, you're like, uh-oh, what do we do? Do we shut it off? And the kiddo today will walk up and flip a switch, turn the computer off, or grab it and go do, and not even think about it. That's the difference between, say, someone like us and someone like our son, our Gen Z son.
What does it have to do with the Bullish case? I don't get what you're talking about.
I'm just talking about technology in general, saying for somebody if we're out there talking and we're attracting people that are probably similar to our age, it's similar to our occupation or whatever, they're kind of looking at this the same way as we are because we were kind of early on in the adoption of technology where it wasn't as comfortable as kids today. Do you see what I'm saying?
Sure. Yeah.
All right. I'm sorry. I went on a rant.
That's okay. He's got a little cocktail in him.
Whatever.
He rambles when he drinks.
Wow. I'm a rambling, gambling man, as
I fall asleep, so I'm going to be passing out here in a minute. Okay. All right. So here we go. Can you see this part?
I can see it. I can't read it.
Okay. For an investor, the salient fact of the invention of Bitcoin is the creation of the new scarce digital good, Bitcoin. Bitcoins are transferable digital tokens that are created on the Bitcoin network in a process known as mining. Okay, we talked about that a little bit ago. Bitcoin mining is roughly analogous to gold mining, except that production follows a designed, predictable schedule. By design, only 21 million Bitcoin will ever be mined, and most of these already have been. Approximately 16.8 million. It's more than that now. It's like up to 18. Bitcoins have been mined at the time of this writing. Every 4 years, the number of Bitcoins produced by mining halves, and the production of new Bitcoins will end completely by the year 2140. So let me come back here.
We're gonna have to take a lot of vitamins to be around for that one.
We're gonna be dead by that one. Our kids will be dead by that one.
Wow, that's crazy.
I know. I've sat down and looked at it and thinking, gosh, John won't even be alive. So, anyways, so let's go. I want to talk about this having.
Sentimental on us.
What?
You're getting sentimental. I was like, oh my God, my baby.
Yeah. Okay. So what is the Bitcoin halvening? Okay. So here we go. We have 3 years, 251 days. You see this, Mark?
I do see it.
Okay. So roughly this date is going to happen on December 30th, 2024. Okay. So
All right. Happy New Year.
Okay. So we just had one on May 11th. If you see my cursor here of May 11, 2020, and the block reward for the miners starting in 2020 on May 11th, he's going to get 6.25 block rewards. And then when December happens of 2024, it's going to be cut in half. All right. And so the block height is this amount when this happened. And they roughly think this is going to be the block height. Now, if you don't know what block height means.
I don't.
Okay. I'm going to share that too. So that way it's just about learning a little bit as we go.
Okay.
Basically, a block height is real simple. It is the height of a particular block is defined by the number of blocks preceding it in the blockchain. That's all that it is. So we saw that it says a blockchain is an encrypted database that records the ledger transactions sequentially and data structures known as blocks. Blockchains are used as the underlying technology for cryptos such as Bitcoin. So all that is that, so what did they say? The block height last year when they did the halvening was 630,000. That means there were 630,000 blocks. And by the next halvening, they were saying roughly 820,000. I don't remember what it said. Okay. That just means the length of it. Remember that I talked about earlier? That's all that it means. Okay.
So does a transaction go through every one of those blocks? Is that the deal?
What do you mean go through it?
Well, if you're talking block height, maybe I'm not understanding.
No, it doesn't have to go through to verify it. It just gets a whole bunch. Just think about if I just imagine if I had a block that was plexiglass clear.
Okay.
Every grain of sand was a transaction. Let's just say that, or let's say a gumball was a transaction. Mark just bought Bitcoin. And that's a transaction. But right now it's floating in this mempool. And then Brenda bought Bitcoin and Rosie bought Bitcoin and Dan bought Bitcoin and all these people bought Bitcoin. Let's just say some sold it. Some went to Jewel and bought some groceries and blah, blah, blah. Some went and got some wine with it and, whatever. Okay. And then these transactions happen and they're all floating mempool. Then they all go in this plexiglass block, let's just say. Okay.
Like a gumball machine.
And they go pop, 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 pop. Those are all transactions. So there's a whole bunch of them up to, I think it's a 1 megabyte.
Yep.
Information. And that's all that it is. So what was your question? Like,
I didn't know.
They just attach to the previous one. But
I don't need to know exactly, but
to confirm a transaction so there's no double spending by Mark, it doesn't have to go through the whole block height. They just confirm it and then it's the next thing attaches so that there's just, like right now, I can go on the blockchain, and I'll show this later. You can go on the Bitcoin blockchain. There's like a website you can go to, and this is how transparent it is. It won't say what my wallet address is, or my mom's wallet address is, or Susie Q's address is. But if you can go on and say, oh, wow, Susie Q has 12 Bitcoin. Whew. You don't know where she's at. You don't know where she's at. You don't know where she keeps it at. You don't know who Susie Q is. It won't even say Susie Q. It's just going to be this.
Susie Q is a number. It's like
it's this long like number and letters. Tons of them.
Okay.
Let's just say there's tons of them just to keep it simple. Okay. And that's a wallet address. So you can go on there and I can go in and plug in our wallet address and see every transaction in there. And then, so like when I bought my mom, when I bought my mom the $100 for her birthday, there's that transaction in there.
Right.
Okay? And then it shows that I sent it like 3 weeks later because it took my mom like 3 weeks to get her wallet set up. there's an address and it says it went over to this address. It doesn't say Rosie's. It just says it went there. It went somewhere. And it shows still green that she hasn't spent it. But then I had to pay someone some crypto, Bitcoin actually, for some financial advice on something technical that I didn't understand. Not financial, but just I need to understand something. And I had already had Bitcoin, and it went to that person's wallet. And when I clicked on that, that's already been spent. So that gentleman already spent it. So either he sent it somewhere else to someone else, or he cashed out. I don't know what he did with it. It doesn't tell me that. So it won't have people's names or addresses on it, but this is all recorded in this whole giant.
So that's the photography aspect of this, correct?
Yeah, but it's all, you can't lie. So if you owe taxes to the government, you can't lie because they're gonna probably send.
Right. Everything is like stamped, like boom.
Yep.
It's not. There's no ambiguity. There's no loose ends.
Like our wallet shows how many transactions, and it'll say how many transactions have happened and how many of those transactions have been sent off. And then those that are sent off, if they're being held or if they've been spent already. So if I give it to my mom and she decides like, oh, let's go on vacation. Okay.
So it's almost like saying, I'll use maybe a poor reference, but it's like testing gold. Like if someone said, oh, I got this real like gold that I just dug up out of the earth, and you bring it over and you're like, no, that's lead spray painted gold flakes, and they test it. So it's not 100% pure. This is a purity test, right? In essence.
I don't know what you mean.
What I'm saying is that I guess how I look at this is says, yeah, there's like no, it's like if you got a piece of gold that is truly gold, oh, I'm sorry, I got a cramp in my leg. Oh, I'm sorry. That never happens to me. All of a sudden, I'm like, dang, nabbit. Okay, anywho, so when you test gold, okay, and it'll say, oh, it's 99.995% pure gold. There's a test for it that says this is kind of like that in some respect. I know it's a little bad analogy, maybe not the perfect thing, but this is basically the blockchain is really telling you that everything is pure, right?
I don't know if it's pure. It's just here's the transaction.
It's 100% correct, is my point.
As far as I can see. So I mean, it's just you can't lie, and it's recorded.
That's my whole point of this is the bottom. Yeah. The blockchain is set up to basically say there again. I'll go back to my card playing days. Everybody's hands are on the table, no double dealing. It's everybody's straightforward. There's no BS in this.
And at Mark's card playing days, he had whiskey and cigars.
And I never won. Very rarely. Yeah. If I'm going to be honest, like the blockchain, I won probably 1 out of every 10 times.
Right. And so if you ever go to a meetup with Mark
and play cards,
ask him to play poker because you'll win.
Yeah.
And don't ever ask him to go fishing with you because he doesn't know how to fish either.
Do not play poker against Brenda because you will not either win or lose, because if she doesn't have
yeah, but I can't hide it, so everybody knows what
that's my whole point is then you're like, I can't hide it. Like, okay, I'm going all in. Or I'm folding before the betting comes around to her. So we all have our things, okay? So
all right, we're gonna cover one more thing, and then I think we're just gonna end it because
we're
we can go on for like, whatever. So we're gonna cover the end of this paragraph kind of, and then we'll kind of okay. All right, so we're just going to finish up to here. We're going to talk about this because we're almost at an hour. Okay. Bitcoins are not backed by any physical commodity, nor are they guaranteed by any government or company, which raises the obvious question for new Bitcoin investors. So if you're listening right now, why do they have any value at all? Some people call it a Ponzi scheme. I've heard that this week. Unlike stocks, bonds, real estate, or even commodities such as oil, wheat, Bitcoins cannot be valued using standard discounted cash flow analysis or by demand for their use in the production of higher order goods. Bitcoin falls into an entirely different category of goods known as monetary goods, whose value is set in game theoretically, i.e., each market participant values the good based on their appraisal of whether and how much other participants will value it. To understand the game theoretical nature of monetary goods, we need to explore the origins of money first. And I hate to leave off at this part here, but because I think this is the part where it starts to get really interesting, but I think that we could, break this up and do this next Friday.
I think this is a great place to break it off. So in that, what I gotta, it's funny because when you sit and you read this, it really is kind of interesting because it says the value.
Did you have any more whiskey down there to pour?
Do I? No, I don't need any more. I
did more really big one.
No, I didn't. I've only honestly, we got a little meter on it. I don't think I put a quarter of a tank in this bad boy, and I'm at probably about an eighth.
Yeah, he's drinking whiskey, so
yeah, whatever. So
like,
what?
What is the proof on that?
My proof of work is that I have
Oh, that's a good one.
I got.
Hey, I got an idea. We talk. You and I are coming up with all these marketing ideas.
There we go.
We came up with our Bitcoin whiskey, and it's called Proof
of Work. Nice. I like that. That's a good one.
Yeah. And
then we'll start our own steak company. Proof of Steak. Yeah. Yep. And then we'll have steak and whiskey, and boom! I'm telling you. And cigars. I'm telling you. Don't cut me off there. All right.
No, I'm saying we're thinking of good ideas.
It is really interesting when it says the values the good based on their appraisal of whether and how much other participants will value it. That's really interesting to me because it's like somebody saying, okay, well,
anything in life.
Yeah. But it's a meeting of the minds kind of like, well, okay, so let's say we want to go out and we go to a restaurant and like, that pizza wasn't worth $15. Was it? And you're like, oh no, that pizza was awesome. You're like, I'd pay 12.
So and you're comparing good or bad pizza to games.
No, I'm just proposing
hashing of technology and mining and nodes and
yes, because people. Hey, look, people understand pizza. Okay, Americans understand pizza. Okay, if you're like, okay, I don't care, whatever food you like, but let's just do pizza. Okay, we're out, we're having pizza, and you're like, and the restaurateur says, you get to pay whatever you want for this pizza. And if it's really good and everybody's in consensus that it's really good, they're going to spend a little bit more money. Let's just seriously think about this. Theoretically, okay, that pizza, if it's really good and and you're all looking at each other like, damn, this is the best pizza I've ever eaten. Okay. You're not afraid to cough up a little bit more money for it. Okay. Now, if it's garbage and you're like, oh, this is
how do you relate this back to crypto?
No, this is what I'm talking about. Just find it.
Just in case someone pops into the replay and they're like, he's talking about pizza. I thought this was
okay. I understand. Well, then
relate the concept.
No, it's just it says values the good based on their appraisal of whether and how much the other participants will value it. That's my point.
I know. So
I love that. That's awesome. That to me makes sense.
If you guys start to understand, so by Mark and I breaking down just like 2 pages of this massive paper that this gentleman is a Vijay Boyapati. Go check out his Twitter handle there, and then he has this paper pinned at the top. So next week when we do this, you can join us. The complexity of what Satoshi Nakamoto created. That's what I think people wrap the value behind. It's not that it's just a simple piece of pizza. It's the game theory that we haven't even gone through that's in it. And we'll talk about that next Friday. And maybe we'll do it like next Wednesday night. Maybe we'll do it like twice a week. We'll do this in the evening or something like that. If Mark has a bad day and he needs a whiskey after work, then maybe we'll do this more than once. So, it's the game theory. It's the mining. It's the proof of the work with the mining. It's the nodes. It's
This is not just a simple
like stock investment.
Yeah, it's not like, okay, Apple makes computers, they make phones. Okay, what's their
Because with all that comes, are the owners honest? Is there any? Let's say one of the owners, you love a certain product, and next thing you know, you find out the guy's, I don't know, he's going to jail because he did some bad stuff with people underage, or there's just some sort of weird stuff, or there's embezzlement that happened with the company, and next thing you know, you're like, oh my gosh, like honestly, so now you have personalities, people running stuff. It's just with this, especially Bitcoin, I believe is the only crypto that does not have a name or a face behind it at all, because Satoshi Nakamoto is gone. Nobody even knows who the person is or the entity is. And this entity or person stepped away, I forgot what year. So there's nobody really running it. It's the people running it, the community.
I had a show back in the 60s or 70s, like, What's My Line? I'm Satoshi Nakamoto. Remember that?
No. What?
You don't remember that? We're like, oh, I'm so-and-so or whatever. And they're like, no, I'm so. And then there was the real person there. You don't remember that show? Oh,
No.
I'm not even drinking. And I'm like, you don't remember that one?
No, but you watch all that stupid stuff.
Okay. It was 40 some years ago. So, but
call him the king of useless knowledge.
Whatever. Yeah, okay, well, you got to have some knowledge that you got to be the king of. So that useless knowledge is one of them. I guess my pizza analogy works. It just okay. So let's just take pizza out, put Bitcoin in. Okay. So when Bitcoin, they didn't know what to value it at the start of all this. Was it $1 or was it zero? Because there's really no value. And where did this all? Oh, wait a minute. Where did this all start? With the pizzas, remember?
Well, it didn't really start with the pizzas, but yeah.
My point is what is the value of it? So what is the value of Bitcoin? The value of Bitcoin right now is 49,863. Okay. And there's somebody willing to say, I find that there's value in that. Now, there are people who say, I can only afford a portion of it. So they still see value in it. That's the thing I think as a person who looks at this as an investment, saying that's where it's all, because the more Bitcoin will do, whether it's a store of value or
50,000, just by the way. I just checked. Go ahead. I just was curious what it was doing.
She was the girl that sat in front, and she's like, oh, I only got a 99. And I'm like, oh, well, I got a 79, but I'm going out.
I actually wasn't that way.
And having a good time.
I was the quiet one that didn't say squat.
Yeah, yes, she did.
We didn't go to the same school. We're the same age, but we did not go to the same school.
I know we didn't, but
I was the quiet one. So
okay.
Yeah.
I think we're done there.
He was the jerk.
No. Oh, no. You.
So, anyway, let's not talk about his high school years.
No, young grasshopper.
Yeah, let's not talk about his high school years.
Yeah, let's not. Okay. Whatever. Quit drinking. We're going to have a problem here. Houston, we got a problem. My wife's going to spit wine all over the screen. Oh my God, I think I'm going to hurl. Okay.
I'm trying to figure out how to get the screen on you. Compose myself. You're making me laugh.
See, I can still make her laugh after 30 years.
Yeah.
Not funny, but I can.
A few times a year.
All right. We good?
All right. We're good.
Yeah, it's a good show. Hey, you know what? Subscribe, like, hate us, whatever. I don't care. You know what? We're just trying to, and this is something I learned from Dave Ramsey. Everybody knows, or maybe not everybody, but a lot of people know who Dave Ramsey is. He said, if you really want to be a good student, be a good teacher. And in teaching something to somebody, you'll learn more. And I think that's where Brenda and I are with this whole Bitcoin. This is not necessarily the easiest thing to wrap your head around, but it is worth.
Once you do, then once you understand this, all the other ones are kind of similar. And so in Bitcoin, I've always called it the granddaddy of them all. And so this is the one that, you know, Mark and I feel that we're going to hang most of our hats on. And I'm going to
the decentralized monetary system.
Yeah. So I'm going to create a playlist in our YouTube channel. And then every time we come in and talk more about this paper, we'll add to it. And so maybe Wednesday night we'll come on and talk. We don't stream on Wednesdays. So maybe Wednesday night we will, and then definitely on Friday night. So if you find this interesting, subscribe, and then, you know, we'll kind of go there. So can you edit this out here, Mark?
Yep. Well, thank you guys for joining us here tonight at Bitcoin Say What?
Bitcoin say what?
Boom shakalaka. Thanks for joining us.